Hey, Sad Nation, what's going on? Hope you all are having a wonderful weekend. Wanted to take this time to create another video for you all, and this time kind of dabbling into stop losses, risk and reward, and really just the mental aspect of it. And the reason why I wanted to show you this was because a lot of you traders are great at seeing what price is going to do, identifying patterns, looking at market structure, etc. Right? But the big challenges that you all are facing is the mental aspect, meaning that you see the trade, you see it doing what it's doing at key levels, but you either hesitate to take the trade or you don't let the trade really come to fruition and you cut a winning trade too early and you cut a losing trade too late. So, what I want to do was just to take a few minutes of your time and show you a chart and then show you an option chain and show you what price did and what your stop losses should look like or could look like, I should say, and what your profits could have been. Again, this is for educational purposes, not financial advice. Just wanted to really just show you visually because I know myself, I'm a visual learner, and sometimes it's hard to just see something through a tweet or text or just on the screen yourself, right? So I'm going to try to walk you through this and show you what I am seeing and show you what technically in my opinion, would be where entry should be and stop losses should be and profits should be, right? Anyway, on your screen right now is SPY as of 420. So the market already played out, right? Really, market play out. But um, if you follow me, you know that I always like to use the high low of 50% of the previous day, which is what you see on the screen right here. This is downward trend line from Wednesday's high, and we drew this down. And you could have played the breakout to the upside, right? But I don't really want to focus on that. I want to actually focus on this rejection because that's the big trade that most of us took, and that's what I actually personally took and was waiting for. But you can see that with the day low here, 412.5 was the pivot that I kept giving you guys for pretty much all last week because we were in a market balance. We have 50% of the Wednesdays candle action, and we have Wednesday's high 415, right? So everybody probably was playing the long here, right? Playing with the trend, which is the right thing to do. But if you missed it, we were looking for that reversal. That's what everybody was looking for, right? We're like, hey, you missed this. It was a lot of chop, so we're waiting for that reversal. So when you got up to here, we already drew this upward trend line. So I already draw upward trend lines from the pre-market, and we already had this here. So we saw this reject here, and then we drew this upward trend line in this action. So we knew that we had a rising wedge. So we had a pattern rising wedge here. We had our 50% here. So once we got to this mark here and we saw that we couldn't break this 413.6 level, that was another supply area where okay, we're at a rising wedge pattern. We have the 50% mark. So two things that going against the bulls right here, right? And we're running to exhaustion, right? This is also considered a broadening formation. So we were waiting for this, right? A lot of people got in here, which is great. You could have gotten here at the top, or you could wait for the break of this rising wedge pattern or the flag, right? And your entry would have been somewhere right here. In fact, your entry would have been here, right? This is the breakout at 215, pull back at 220, retest. You would have entered right here at 225. So, like I said, I am going to mark this off for you so that you can see because a lot of people would have entered somewhere here. First entry, right? Off the 50% rejection and also off the upward trend channel. Your your pattern breakout would have been here. Pattern break entry. Okay. If you would have in here, you would have put your stop at the high of day. Somewhere around here. That's what would have been it. A lot of people tend not to know that, or they tend to put it somewhere in the middle, which is not wrong either, right? Not it's subjective where you want to put it, but technically, if you're playing a pattern breakout, you would put it at the top of the pattern. If you would have gotten here, you would have put your entry, your stop loss somewhere around here. You can see there's a lot of consolidation right here. So a 414, 21. But here's the point, right? So this could have been your first entry if you would have put this rejection. And also, this is a bearish engulfing, right? It went up and it came down. So that was a 3. You should have gone in here and then put your stop up to high. And I will show you that on the screen as well. So here we go. I am going to show you the option chain for the 414 put at the time. Let's see. I'm trying to put this in a way that you can all see it. Here we go. Let's just do it this way. Okay. So this is the 414 puts for 0TT on Thursday. Most of you were going to play this anyway. The reason, so 414 would have been 2 out of the money at that time. Well, actually 1 out of the money. Either way, it would have been probably the one you would have got because it was, as you can see, the low, it was 64 cents. And then at entry at 2, this was the 155. And that's what it would have been. 155 would have been right here at 66 cents. So if you would have got in on this entry, you would have been 66 cents. Your stop loss would have been up around 414. So these probably would have been maybe, I want to say, 40 something cents. But the point is this, right? So this would be your stop up here if you got it. If you got in at this breakout. So the breakout, which was around 225, which is it right here. This is the breakout. This is when you broke out a pattern. You broke out, or confirmation. You broke out a pattern here, retest, and then shot back up. So you would have got it at 123. And remember, I said you would put your stop at the higher day, which would have been 66 cents. That would have been your stop. At this point, you're aiming pretty much for low of day, which would have been open, right, at 9:30, which is up here. So that was at $3.07. So your risk and reward ratio would have been pretty much, you were willing to give up, 60 something cents in order to gain $2.28 or $2.72, or actually $2.80. So it really would have been almost a 4-to-1 risk reward ratio for that. Let me see if I have the, let's see. Like I said, you would have aimed for a low day, which is about here. That would be your stop. So this would have been what you're looking for. That would have been if you got in here, right? Obviously, if you got in here, you would have had, 66 cents, and you would have stopped around like 40, 30 cents from here. But then you would have been aiming for, first, pivot would have been, you would have been aiming for the pivot. And then once you break pivot, you aim for previous low day, and then you would aim for low day. And you can see right here, right? So that's why I said here, if you would have gotten in, after this bearish engulfing, you would have gotten here. That could have been your rejection play off of this, and you would say you set the high day. Well, you could see this is 92 cents for that, and your stop would have been 66 cents. And then, like I said, you would aim for that breakout, which would have been 120.28. And then if you go down, you can see on the side here, it would have been like, $2.20, $2.50, $3. I mean, these eventually hit $3.70. But the whole point is this, right? What happens is this. A lot of you traders will get into this trade here, breakout fail. It'll probably hit this first candle at 225, which will be around it looks like probably like the 160, 170 mark. And then you'll cut out because you don't know where you're aiming for. Or if it does this pullback, let's say you got in, you would have gotten a little bit late somewhere out here, you pull back, you got scared, you guys cut it out, right? That's the whole point. Your risk and reward and your stop losses is what it is, meaning that a lot of you will get into a trade and you see come back here and you'll cut it out because technically you're like, oh man, even if you, like I said, you would have got in 128, it would have went back to the middle here, which would have been 92 cents. You would have been down technically, like 36 cents on your position. So that would have been pretty much like 25% on your position. And a lot of you would have got scared. Technically you should have put your stop here, which would have been 50% of your position. I know it's a lot. But the point is you were aiming for pretty much low of day, and if not even lower. Like low of day would have netted you like pretty much $3 So from 128 $3. So you would have got a dollar and 60 cents out of it, and you would have give up 60 cents. So you see what I'm saying? A lot of you don't play that way, and that's the problem. That's the challenge. It's like, that's why you cut it out early. And if it's going the wrong way, like well, that is where your stop loss is, right? It's up here. Or you could set it, hey, you want a little tighter stop loss, set in the middle. But a lot of you, what you'll do is you'll get in at 128 here, and you'll set your stop for like probably right around here, which would have been maybe a dollar 10 cents, which is 18 cents off a premium, which is 10%. But sometimes that's too tight. In this instance, it worked, but in normal instances, for especially SPY, it's too tight of a range, and it doesn't really work, especially for a pattern breakout. If you go look at for a pattern breakout, you always see that say, hey, the entry is somewhere around here, the breakout, and your stop losses is usually at the top of the trend channel or at the bottom trend channel, depending on which direction you're going. And that is something that I want you all to focus on. It's like, hey, when you get into position, if you cannot stomach getting in at $1.28 here and letting it stop you at 66 cents, one, that might be mean that you're taking too much of a size, right? If you're on one contract, I guarantee if you bought one contract and you're like, oh, I'm down $60, but potentially you get $300 in return, you would stay in that trade. But when you're in 10 contracts, you're like, oh man, I'm not willing to let go of $500 in return for potential return at $3,000. That's where it gets a little tricky. And then if you get even more and you're like, hey, I just dropped $12,000 and I'm not willing to lose $6,000 for $30,000 in return. But that's what I'm trying to say is that you need to be able to define what you're looking at when you're trading. So if you're playing a breakout like this or key rejection level, um, or you're playing the candles and whatnot, you have to say, hey, I know that it can go move a certain amount. This is what this particular setup entry is going to be, and this is where this particular stop should be, and you got to let it play out that way, right? Obviously, you have to define where you want to take exits as well. As I said, if you would have gotten around here at the top, like if you ever got in the middle here, right? Let's just say the middle. In all honesty, if I got 30 contracts or whatever contracts, my first scale out would have been a pivot, right? We knew that pivot is going to be strong, you see here. And the second scale out would have been low day. And if I broke that, I would shift my stops. Obviously, you move your stops along the way, right? You don't keep your stop at the high day once it starts moving down. Once it moves down to a certain area, let's say, around here, 412, my stop would have been that entry. So now at least my rest of my position will, at worst, go break even. But that's what I'm saying. You have to have targets, right? Another target would have been the low day, current low day. This was previous low day, but this is just examples. So, because a lot of you will literally get into position here, you'll cut out here, and then you'll let the position like go up here, without having a stop. So I wanted to point this out visually because a lot of people are just literally getting in here, getting out, and it's just that's where you're not capitalizing on these trades, or you're cutting your losers a little bit too late. But this is the option chain for that 414 put on the same day. And I just wanted to show you all this. Like, if you're playing the pattern breakout, key level rejection breakout, whatever you're trying to trade, there is, certain kind of general parameters where you should take entries and you should scale out or exit completely, and where you should have a defined hard stop and you should let it play out that way, right? But that's what you can see. So, like, if you would have played the breakout, technically your stop should have been at 66 cents, entry at 128, aiming for around, I want to say $3 or a little bit, a little bit more. But anyway, and this can be applied to anything, right? We can say like for head and shoulders, for a cup handle, whatever we're playing, right? We can even say overextensions, right? We knew that this was going to eventually come back up because 410, remember 410, 410.5 was another area of pivot. So we knew that it was going to go up. We knew that was a good place to bounce, and you could have played it too, right? You would have, let's just say you didn't get in here, but you're like, okay, it's not going more lower, right? Stop forming lower lows. Now we can see a lower, higher high, lower low, and you can say, hey, I'm getting in here. My stops could be at the low of day, and whatever that call option price would have been, you would be like, hey, I'm just gonna ride it up. So same thing, vice versa. Your stop would have been here, and hey, if you get stopped out, you get stopped out. That is just the way the trade works, right? And a lot of you are not willing to accept that, and that's a mental block that you all will have to get over. And once you get over it, you will see a lot more success in your trading. Anyway, hopefully that was intuitive and helpful for you. If not, let me know, and we'll try to clean it up in the future for another version. Anyway, thank you for your support. Like, subscribe, and I'll talk to you later.